everybody, I'm Belinda from Financial Education Professionals, and today I'm joined by Zac from the Financial Services and AML team at Cowell Clarke Commercial Lawyers. And we're here to talk all things AML reforms. Thanks for joining us, Zac.
It's my pleasure.
So why is the government making these reforms?
So the changes are coming into effect for two main reasons. The first is to simplify and modernise the current regime, which I think all current reporting entities would be in agreement is definitely necessary. And the second reason, and in my opinion the more pressing reason, is to make sure that Australia's laws meet the international standards set by the Financial Action Task Force. So for those of you who don't know, the Financial Action Task Force is the global watchdog for money laundering and terrorism financing. And they essentially set the global standard for what an AML CTF regime should look like. And unfortunately, Australia was at risk of failing its next assessment and being added to the Financial Action Task Force's grey list, which is essentially a list of jurisdictions that pose a higher risk of money laundering and terrorism financing. Now, that would obviously have some quite dire consequences for the Australian economy. And so hence we have the changes, and we have the changes quite quickly.
So if people hear a term mutual evaluation process, that's the assessment process, isn't it?
Yeah, so the Financial Action Task Force is, together with its member states, are responsible for assessing the standard of a particular jurisdiction's AML CTF regime, and Australia has an assessment scheduled for 2026.
So as you mentioned, there were some groups that hadn't been represented in our regime before, and that was definitely one of the key areas in previous evaluations that we're looking to address in the reforms, correct?
Yeah, so I think it's really important to understand that there are two sets of changes that are being introduced. The first set of changes apply to current reporting entities. So they're the entities that are currently regulated by AUSTRAC, and those changes come into effect on the 31st of March 2026. The other set of changes apply to tranche 2 entities, so that's businesses like law firms, accounting firms, real estate agencies, trust and company service providers, and those changes, which consist of bringing all of those entities into the regime, commence on the 1st of July 2026.
So the key dates people need to remember are 31st of March for current reporting entities and 1 July for the ones being newly covered.
Yes.
2026, those dates are 2026.
Yes. And I would remind reporting entities that they need to be compliant by those dates. So early preparation is definitely key to making sure that they and their staff are ready to go on those key dates.
Thanks for that.
No worries.
Zac, what are the key changes that reporting entities should be aware of?
So I think just the overarching change is that we're moving away from a system of prescriptive requirements to a system of more outcome-focused obligations. So what that means is that we're moving from a system where the law says you must do ABC to a system that says you must achieve X, Y, Z, and then puts it in the hands of the reporting entities as to exactly how they do so. So that's kind of the overarching change. We're also moving towards, because of that additional flexibility, more of a risk-based system. So a system whereby a reporting entity can look at the risks that its business faces and that its customers pose, and then treat those specific risks rather than adopting a one-size-fits-all system that's kind of handed down by Parliament and AUSTRAC.
Right, so what does that mean for existing reporting entities and their AML programs?
So the concept of an AML CTF program is going to completely change. You'd be aware that an AML CTF program is currently divided between Part A and Part B. They're removing that distinction. They're also removing the distinction between standard, special, and joint AML CTF programs as well. And what we're going to have is just a kind of single concept of an AML CTF program, which is going to consist of a reporting entity's MLTF risk assessment, and their AML CTF policies, which are the documents that are going to set out the process and procedures that they have in place to treat the risks that they've identified.
And also something that's come up is that now where it actually directly affects someone, proliferation financing needs to be covered as well.
Yes, so we're adding another acronym to the list. So we've got ML for money laundering, TF for terrorism financing, and now PF for proliferation financing as well. It is worth noting that there is going to be an exemption included in the regime that very broadly says that where you've identified your proliferation financing risk to be low and your MLTF policies sufficiently mitigate that low risk, you're not going to have specific policies in place to treat proliferation financing risk. But that is a very specific exemption, so I would encourage people to actually look at the requirements to make sure that they satisfy it.
Awesome. Good to know. Zac, we've touched on the requirements around AML, CTF, and now PF programs. So what does this mean for reporting entities?
So basically, reporting entities have two options at this point. They can either review their current AML CTF program and update it so that it complies with the new Act and the new rules, or they can just start fresh with a new AML CTF program. What I would suggest is that they take the opportunity with the additional flexibility under the new regime to tailor their program to their business. So if there's any processes that they have in place currently that aren't working for them, or if there's any requirements that are perhaps being doubled up on or just unnecessary, that they really streamline their AML CTF program to make sure that it's working for their business. And under the new regime, they have the opportunity to do that.
Now, AUSTRAC's already taken enforcement action against entities, and part of what they've sort of been pinned for is not having AML CTF programs up to scratch. So what will be the implications in terms of law breaches around people's programs under the new regime?
Yeah, so I should just say, for starters, a lot of the AUSTRAC activity over the past few years has been very much targeted at larger, higher risk entities like banks and casinos. But that's not to say that they're not also going after non-compliance by smaller entities as well. And under the new regime, as you've raised, a breach of your policies is actually a breach of the law. So it's really important that when you're putting those policies in place, you take the time to make sure that they really work for your business and that they're going to be simple to comply with, because breaching them can have some pretty significant consequences.
Now, Zac, not everyone's got a simple operational structure. So can designated groups still have a group AML CTF program?
Yeah, so the concept of a designated business group is changing to that of a reporting group. But yes, under the reporting group structure, those groups will still be able to have a group-wide AML CTF program, and members of the group will still be able to discharge the obligations of other members of the group as well. There are a number of changes that are going to be introduced on that particular point though. So the first of which is that a reporting group can now include non-reporting entities. So you can have businesses that don't provide designated services discharging the obligations of businesses that do. Where they're also introducing a concept of a lead entity, which is the entity within the reporting group that's responsible for the group-wide AML CTF program and kind of group-wide compliance management. And something really important to note on that is under the new regime, where a member of a reporting group provides a designated service, the lead entity of that group is also taken to provide that service. And what that means is that where a member of the reporting group breaches the law, the lead entity is also going to be liable for that breach. So that's a really important consideration for reporting groups when it comes to deciding which entity is going to be that lead entity, that liability point there.
So essentially they'll have to make sure that they manage any accountability around delegations in the program.
Yeah, it's the program for a reporting group is going to have additional requirements, and one of those requirements is going to be that the program sets out the circumstances in which one member of the reporting group can discharge the obligations of another, just to make that very clear.
Thanks for clearing that up. Thanks, Zac. So we've talked about AML CTF programs. So let's look at something else, like what's happening with things like suspicious matter reporting under the new regime.
Yeah, so the reporting obligations under the new regime aren't actually all that different to the reporting obligations under the current regime. So entities are still going to have to report suspicious matters to AUSTRAC. Where the threshold transaction reporting obligation applies, they're still going to have to report those threshold transactions to AUSTRAC, and the annual compliance reporting obligation is still going to apply as well.
Excellent. It's important that people keep track of their record keeping and submissions from reporting.
100%. The reporting obligations are obviously to a large extent staying the same, as are the record keeping obligations as well. And as we all know, when trying to demonstrate compliance to AUSTRAC, it's really important that you have complete and accurate records that can substantiate that compliance.
Excellent. Thanks for that advice. Thanks, Zac. So we've covered the AML CTF program, and we've touched on a little bit around the reporting and record keeping. One thing that's probably a key element in people's programs is going to be the role of the compliance officer. So how is that changing? And there might be some tranche 2 entities that have never had to traverse this need before. So what are some tips for them as well?
Sure. So yes, there is a requirement under the current regime to have an AML CTF compliance officer, and that requirement is going to continue under the new regime. However, at the same time, there's going to be a whole bunch of new requirements introduced to the regime. For example, there are now going to be some eligibility requirements for an AML CTF compliance officer. They're going to have to be an Australian resident. They're going to have to be a fit and proper person. They're going to have to hold a managerial position, and they're going to need to have the access and the authority within the business to properly fulfill that function. There's also some new requirements for reporting entities to notify AUSTRAC of who their AML CTF compliance officer is, and then if that person changes, to make sure that they're letting AUSTRAC know that that change has occurred and giving them the name of their new AML CTF compliance officer. And finally, there's also going to be some more specific requirements as to the role that the AML CTF compliance officer is going to need to fulfill. And just for reference, that role is to implement the reporting entity's AML CTF program. So basically, they're responsible for the day-to-day compliance management for the reporting entity.
So ideally, particularly with respect to tranche 2s, they should look to skill someone up from now, rather than maybe look to do alternative things like hire an external person in the short term.
Yeah, I would feel for current reporting entities, it's certainly something to think about. So you should definitely be looking at your current AML CTF compliance officer and considering whether they meet the requirements under the new regime. And if you have identified that they perhaps lack some of the expertise that you think that they would need, looking to upskill them as soon as possible. So obviously for current reporting entities, they have until the 31st of March 2026 to get the AML CTF compliance officer in a position to adequately fulfill that function under the new regime. And for tranche 2 reporting entities, they have until the 1st of July 2026 to get their AML CTF compliance officer in a position where they can fulfill their duties under the new regime.
Nice. So preparation is key. No panic stations just yet.
No, not just yet.
Thanks, Zac. So we've looked at law and we've looked at the program and talked about record keeping, reporting, and the crucial role of the compliance officer. And now everyone's probably desperate for information.
Yeah.
So what's AUSTRAC's timeline for the release of its guidance?
So today, AUSTRAC hasn't released too much information, but they have announced that they will release some sector-specific guidance for tranche 2 entities in December 2025. And at the same time, I think that they're going to be releasing some AML CTF program kits to help those tranche 2 entities prepare their first AML CTF program.
Great. So there is already some information on the reform section of AUSTRAC's website, but there's more to come. Okay, so we've covered broadly what everyone needs to be doing under the regime going forward. But even before they get there, what does the action items list look like for current reporting entities and tranche 2 entities as those timelines move closer to when the reforms actually take effect?
So I think that all reporting entities should be keeping those key dates at the front of mind. So for current reporting entities, they need to be compliant by 31 March 2026, and tranche 2 entities need to be compliant by 1 July 2026. And kind of working back from there. So before that time when they need to be compliant, they need to make sure that they're getting a compliant AML CTF program in place. For reporting entities that are currently regulated by AUSTRAC, that's going to mean updating their current program or adopting a new one and making sure that that updated or new program is compliant. And for tranche 2 entities, it means getting a new AML CTF program, their first AML CTF program, in place. After they do that, they need to make sure that they're training all of their staff so that they're ready to implement all of those new processes and procedures by the key date that applies to them.
Zac, how can entities get assistance with reviewing and updating their AML and CTF programs?
So I think it's important to identify that there are a lot of requirements that apply to an AML CTF program, both in the AML CTF Act and in the AML CTF rules. And I'm sure that there are some reporting entities out there that have the legal capability to do everything in-house. There's also a lot that don't. And for those reporting entities, they're going to need assistance from a law firm or someone who provides those type of services to either update their existing AML CTF program or help them prepare a new one that complies with both the Act and the rules. What I would say is that because of the additional flexibility under the new regime and the opportunity that presents to tailor the program to the business, it's really important to seek help from someone that not only understands AML, but also someone who understands your business, because that's going to allow you to have a program that works better for you. And as we discussed earlier, now breaching the program is breaching the law, so it's really important to have a program in place that is easy for your staff to follow, because at the end of the day, AML CTF compliance is a top-down system. It's not only a set of obligations that needs to be complied with by your board and your managers. It's something that needs to be complied with by everyone within your organisation.
Okay, is that something that Cowell Clarke can assist with?
It certainly is. So Cowell Clarke, we have a lot of experience working with a range of different reporting entities, both in the financial services space and outside of it. So we're very well equipped to assist with reviewing your current AML CTF program to identify how it needs to be updated, with updating that program to make sure that it's compliant with the new regime. And also we often provide independent review services. So independent reviews are required under the current regime and will continue to be required under the new regime. Under the new regime, there actually is a minimum requirement to have one done at least once every 3 years. So we're very well equipped to assist reporting entities with that independent review as well.
And at Financial Education Professionals, we actually offer 3 levels of risk awareness training, and that's tailored based on scope and level of role, so we can assist with risk awareness training.
Yeah.
Awesome. Okay, thanks Zac for helping us unpack the new blooming world of AML CTF reforms.
My pleasure.
Thanks.